When it comes to FHA loans, there's one component that a lot of people just miss out on, and they're what's called overlays. Okay, an overlay is this. For example, FHA truly does not have a minimum credit score. Well, I'll retract that. FHA has a minimum credit score and it starts at 500. But I challenge you to call 100 lenders over the weekend and see if anybody will do a loan if you have a 550 credit score. You'll probably find 0 out of 100.
Normally, the two basic things you need to qualify for FHA is you want a credit score. I think it ranges. So there's different investors with different companies. So some minimums might be different in different brokerages or banks or whatever. But it can be as low as 580 to like mid 600s. I would say 640. However, in my experience, most lenders relatively take 600 as their minimum score.
So that, in essence, is an overlay. Another overlay is what we call a reference debt ratio. Okay, a debt ratio is your monthly expenses divided by your monthly income. Some companies will only allow you to go to 50%. FHA will allow you to go all the way to 57%. What I'm trying to get at here is if you call a lender after you see this video and you're like, well, Dan said I should be able to qualify with this score and this debt ratio, but if you call somebody and get denied, it's because they have overlays. We have one overlay and one overlay only, and it's your credit score. The minimum credit score that we will accept at this time is 580, and that is still among the country's lowest credit score out in the market. You're going to find most lenders are at 620. Okay, so that's what we reference overlays. So now let's get into the guts or the nitty gritty of FHA and the requirements for an FHA loan. First off is credit scores. Like I said, FHA, all you need is a 500 credit score to qualify. We require that you have a 580 or higher. Most lenders right now are at 600 to 620. So those are the credit score requirements that are needed. The next thing is the loan to value. Now this is standard all over the country. When you're buying a property, you only need 3.5% down. So the loan to value is basically your loan amount divided by the value of the property. Okay, so if you're getting a loan to value of 96.5%, that means you only need 3.5% down. Okay, so that's if you're purchasing a home, and it's not only for first-time home buyers. Anytime you're doing an FHA purchase, you only need 3.5% down. So now if you're looking to refinance, there's a couple different variations there. If you have an FHA loan right now and you're looking to refinance it, it's pretty simple. It's called an FHA Streamline. We just need to validate that you've made your last 6 payments on time. And within the last 12 months, you can have a 1 times late. And your credit score is needed on that is a 580. So if you meet those 2 parameters, basically you qualify. If you're looking to pull out cash, you can go up to 80% of your home's value and pull out cash to pay off any bills or take out as much money as you want. Credit issues. This is the area that plays a role in many people when they call and try to qualify. So what I mean by that is bankruptcies and foreclosures, okay? So bankruptcies are broken down into 2 pieces. There's a bankrupt BK7 that they call it, and a bankruptcy or a BK13, okay? I won't explain what those are, but the time duration in those are, if you filed a Chapter 7 bankruptcy, you need to be out of that for 2 years. If you filed or are in a Chapter 13 bankruptcy, if you've completed it, you need to be out of it. And we need to get a pay history on that to make sure you didn't have any late pays. But if you're in a Chapter 13 bankruptcy right now and you've been in it for a year or more, we might be able to help you there as well. We just need to show the pay history with that with no late pays. We have to put that payment into what we call your debt ratio. Foreclosures, you need to be out of a foreclosure for at least 3 years from the date that the deed came out of your name. Okay, so those are the credit, I'll say the credit issues with FHA guidelines. Now, debt ratio. Debt ratio is an area that a lot of people get confused with, but what your debt ratio basically is in its simplest forms is you take all the creditors on your credit report divided by your gross monthly income. The standard out there with most lenders is they'll only allow you to go to 50%. However, FHA will approve loans up to 57% debt ratio. So that means if you called a lender, again, you called another lender, they might have that overlay that, you have a 51% debt ratio and you got turned down, where if you came to me, I could have approved you. Now, the last piece of this puzzle is the rate and the costs for an FHA loan. Okay, so I'm going to break this down. This is a little detailed. FHA basically has very good rates. The reason behind that is they're government backed. Okay, they're government backed. However, there's a cost to that. So when you get an FHA loan, FHA actually charges you 1.75% of the loan amount to insure your loan. Also, they have what we call it an MIP, mortgage insurance premium. You guys might know it as a PMI factor. So they also charge you MIP or mortgage insurance of 0.85 on a monthly basis. So that's sometimes it's a good rate. Sometimes that's a bad rate, depending. So here's the sweet spot. Let me just break it down to this way. If your credit score is under 680, most of the time it's cheaper and wiser to go with an FHA loan. Okay, why? Because you'll get a better rate than a conventional loan. Plus your PMI or MIP is lower on FHA than it is with a conventional loan. However, it's not a long-term loan. So what we usually do is we put you into the FHA program, keep you in that for a year or two to get everything situated, your credit scores up, maybe your bankruptcy, get a little bit older, try to drive down some of your debts, because a conventional loan will go to a 50 debt ratio, where an FHA loan will go to a 57 debt ratio. So in conclusion, FHA loans can be tricky because of overlays, okay? You might call a lender where they turn you down, and then you might call another lender and they approve you, and you're just like, why? And it's overlays. So we have only one overlay, like I stated, and that's your credit score. So if you have a credit score of 580 or higher and you've been rejected somewhere else, please let us know. If you have a debt ratio that's over 50%, got denied, let me know. You have a bankruptcy that's over 2 years old, but not 4 years old, let me know. So there's a lot of reasons why I should be able to help you with an FHA loan where a lot of lenders won't be able to. So hopefully you found value in this video. If you did, don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. God bless, guys. Hope to hear from you soon.